Welcome back, traders. This is our Gold Weekly Review. My name is Angelo Zitis, and this week's title is Eyes on the Prize. Gold steadied and maintained its price level in the latest sessions as some main fundamental drivers eased worries on their possible outcomes. Fundamental matters like the US-Sino trade dispute and Brexit, which have been major drivers for gold prices, have shown signs of better days for the time being, and traders could be locked in a wait-and-see position. These, along with some other factors affecting gold price movement, will be the main concern of this report as we attempt to provide a short and hopefully simple outlook this week. Our first point is fundamental effects. First, we make a start with the US Sino matter. This matter has placed a lot of attention and volatility on the precious metal and will continue to do so as long as the matter remains unresolved. Both the US and China support the notion that the talks have been going well lately. This has been confirmed from both sides' officials, but most importantly by Chinese Vice Foreign Minister Li Yucheng and US President Donald Trump. One of the comments that surprised us was that tariffs on Chinese goods planned for December could be removed if talks go well. We say surprised because even though the trade talks are on a much better and productive level than they were months before, we believe some major components of the situation remain far from being agreed upon. Even if the two sides manage to sign an initial deal, the problem could persist, as the US is basically asking China to completely change its ways of business and legislation. Chinese officials today made it clear that they are not willing to remove themselves from the development of international industries. They also added they will be more open towards foreign investment on the internet, telecom, and automobile sector, which is basically an indication that they will continue to expand in new markets. However, the fact that the two sides are considering a partial deal is positive for the short run, as it evidently pushed gold prices lower, but it also indicates that they may have an issue signing a final deal. In any case, gold traders will be closely monitoring the situation and will apply pressure depending on the developments. Moving now to Brexit. Brexit, on the other hand, has provided the required action for some volatility on gold surface. Until the moment, a no Brexit deal is confirmed to be out of the picture, and tonight a second reading vote will take place in the UK Parliament that could provide further movement on gold prices. Europeans don't believe in no deal Brexit scenario, while from the UK side, any outcome is possible. Gold trend. On a pure gold trading perspective, traders are seemingly and steadily removing bullish positions since the previous weeks. Even though this is evident in our technical analysis, we would like to stress the fact that this doesn't confirm the future sessions will be similar. Gold traders should view the precious metal with objectivity and allow room for swings to take place, especially on headlines regarding the above-mentioned topics or even financial releases. On the US front, moving to the US dollar, which gold ounces are mainly denominated into, a significant observation has occurred that may prove useful to traders. According to the dollar index, the greenback has weakened in consecutive sessions lately, while gold has also followed a similar pattern. Gold and US dollar rarely move in the same direction, and traders opening positions trying to exploit this movement should be particularly careful, as this could prove very dangerous. This could be evidence that the US dollar is driven by different events compared to gold. This weakening of the dollar entices traders to move to equity markets rather than gold, as the precious metal has proven to be unpredictable on news updates. Also, the relationship of gold and the US dollar may go back to being adverse as it usually is, without giving any notice. Moving to our conclusion. Traders should be aware of the upcoming financial releases from the US on Thursday, October the 24th, with the core durable goods orders and the headline durable good orders coming up, potentially providing volatility for gold prices. Also, the political scene in the US regarding Turkey's military actions and the US president's impeachment matters could also be keeping gold traders on their toes. Moving now to our technical analysis. This is gold 4-hour chart. And gold has been in a downward movement since the 25th of September. This is evident with the blue downward trend line that highlights the trend. Since October 1st, the precious metal has been moving between the wide R3 1509 resistance level and the S4 1464 support level. Yet, after the 10th of October, the sideways range became even smaller, and gold traded between the R1 1495 resistance level and the S2 1477 support line. After the 16th of October last week, the sideways motion became even narrower, maintaining the R1 1495 resistance level, but moving the support line higher for the S1 1483 level. Our S1 1483 support level was tested last time today in the Asian session, while the R1 1495 resistance level was tested yesterday, the 21st of October. Breaking above the R1 1495 resistance level, the next possible stops could be nearby the R2 1500 round number level, or even the R3 1509 resistance barrier that were both tested in the first week of October. Traders should also be aware of the R4 1517 resistance level that was also seen in the first week of October. In the downside, below the S1 1483 support level, the next possible target for traders may be the S2 1477 or even lower, the S3 1470 support line. The S4 1464 support line was last seen in late September, but is worth mentioning. The RSI indicator below our chart has been running between the 70 and 30 level for all the previous 4-hour sessions in October, confirming the sideways movement. Now, if you've heard something in this report that you found useful, make sure you apply it to your trading. That's the whole point. Thank you very much for your time. Enjoy solid trading, and we'll see you next week.